after regulators seized the assets of Silicon Valley Bank, marking the largest bank failure since the 2008 financial crisis.
This week, we basically witnessed venture capitalists collectively lose their minds.
You're obviously talking about me, right, Janelle?
No, I'm not talking about you, Eric. I'm talking about the collapse of Silicon Valley Bank. In this emergency episode of Uncapped Notes, we're going to talk about what happened, what happens next, what you should be thinking about in terms of your money, and we have some breaking news to share too. So Eric, let's start with what happened over the past week.
All right. So essentially it works like this when you have a bank account, Janelle. Let's say you put $100 into the bank of Eric, right? That cash isn't just sitting in your checking account. What the Bank of Eric will actually do is begin investing it into other kinds of projects and investments that can make money for the bank. Sometimes I'll loan a part of your cash to another business. I might even invest it in something like treasury bills or some sort of asset that's relatively safe that can generate cash for the bank. So the problem is this: maybe I will invest $70 or $60 of the $100 that you gave me. But if I lock it up into a long-term trade, and I'm doing this across all the bank accounts that I have on deposit, and everyone decides to pull out their money at the same time due to a panic, well, your cash may not be available. I only have $30 or $40 available to give back to you out of your $100. And that's essentially what happened with Silicon Valley Bank. They took a huge position into a long-term investment with short-term capital, people's money. And when a panic set in and people wanted to pull their money out, there was concern that there was no cash available to actually return this money. But it's even beyond this technicality. The big failure in the past week, Janelle, was that the Silicon Valley Bank leadership failed to communicate their position very clearly. And they actually triggered their own bank run by essentially saying, hey, you've got nothing to worry about. All this kind of rumors and confusion, don't worry about it, except if everyone pulls out their money, then you should panic. That's literally the paraphrase of the call that we had with the CEO of Silicon Valley Bank on Thursday morning of last week, about a week ago, as of this recording. And as a result, $42 billion was pulled out within 24 hours.
Okay, 42 billion, Eric. That's a totally different scale than the $100 I put into the Bank of Eric. For founders who were really in this situation, what did you see happening behind the scenes?
Okay, so for our team at Hustle Fund, we were in full crisis leadership mode, right? And we were trying to serve tons of founders. But if I were to take a step back, this was a really fascinating moment of history to participate and also witness, because we saw at a huge scale a mass prisoner's dilemma.
Okay, let's take a step back there. Can you explain what a prisoner's dilemma is?
All right, Janelle, let me sort of paraphrase with an example. So let's say that you and I decide to rob a bank. Okay, we're both criminals, but we get caught. So the police take us to the station and they put us in separate interrogation rooms. And they tell us like, hey, but we have a code with each other, which is like, if we don't say anything and claim that we're innocent, we're going to get a light punishment. Okay. But the police tell us, hey, if you decide to narc on Janelle and tell on her, or Janelle, if you decide to like tell on Eric and say that he did it, then you will walk away with no prison time and he will take all the prison time. Right. But if we also, okay, here's a weird situation. We're in separate rooms. We don't communicate with each other. Right. We think that there's an understanding that we should, collaborate together so that we get a slightly less bad punishment. But there is an incentive, because we don't know who's talking about each other, to actually possibly be tempted into just telling on the other person so that we get no prison time. Now, the problem with this kind of situation is that there's a high incentive for you to tell on the other person because you don't want to go to jail. But there's this incredible suboptimal coordinate, which is we both tell on each other and then we both go to prison for the maximum sentence, right? I know that's a bit of a long explanation, but a version of this was actually happening with the Silicon Valley Bank situation, which was all of us would have benefited if no one moved their money. Okay, like yes, there's problems with the treasury management and some screw ups with the communication, but the bank was actually fine. Like they would have been able to get through this stuff. And if everyone kept their deposits, Silicon Valley Bank would have the same kind of business as usual right now. That said, people in Silicon Valley don't know everyone. Like not every startup founder is talking to every other startup founder, or every VC is talking to every VC. So we don't know what the action is from the other. And you don't want to be left holding the bag if everyone leaves and you stayed, right? Because the downside of that is tremendous, which is you might lose all of your money.
Right.
So as a result, all of us collectively in Silicon Valley kind of lost our minds. And when a bank run seems very probable, we had to do the less optimal but rational decision, which is to pull out our cash so that we can protect it. And that's basically what happened in the past, and actually within 24 hours when the banking crisis happened on that Thursday of last week.
Since last Thursday, things have calmed down. Yes, some people took their money out, but there's been a lot of development. We found out on Monday that everyone will be able to have all of their funds covered because the Fed stepped in.
Yeah, that's right. So there have been some rumors over the weekend when there wasn't banking hours, when people were sort of lost to their own imagination and devices, literally their devices like Twitter. A lot of rumors are starting to come about, which is like, will other banks fail too? Is there contagion happening? Are regional banks like Silicon Valley Bank or others at risk as well? But fortunately, around 3 p.m. Eastern time, the Fed stepped in and had a great response. Actually, the U.S. government, just generally, even Congress, had a great response saying, like, don't worry. If you're a depositor, you put your money in, you've done nothing wrong. We got your back, and we're going to make sure that your entire deposit is safe, even beyond the FDIC insurance limit. So a quick definition about that. There is insurance on the first $250,000 that you deposit into your checking accounts. There's some variance on that, but it's usually about $250,000. And the Fed was saying, if you're a business with more than that, or a person with more than that, don't worry, we're going to cover that too. So unlikely that we're going to see mass contagion, but it has been shaking bank stock, stock market values and things like that. We're not completely out of the woods, but I do think that we are out of a massive kind of danger zone as of this Sunday.
Okay, so it is Wednesday, March 15th. Eric, where do things stand now? What happens next?
Yeah, so we actually have some breaking news to share. We have spoken to the leadership of Silicon Valley Bank last night on March 14, and they actually shared with us news that they said that we're open to also propagate as well. And you're going to see this announcement from them today too, which is Silicon Valley Bank is not likely going to go through a full collapse. There is new leadership in place, and they're going to actually try to reinvent the bank and continue to go forward. So a few things. If you bank with Silicon Valley Bank right now, your deposits remain safe. The safeguard that the U.S. government has offered about protecting all of your deposits still remains. But in addition to that too, they're going to hold to all of the loans that they had offered people. Like those things aren't going to go away. And you can actually open up new bank accounts and new deposits into Silicon Valley Bank and enjoy some of their really, really amazing small business lending products today. So on Sunday, there was an announcement by the FDIC that people will have to move their money sometime in the next 45 days. Was kind of like the messaging that the bank was going to dissolve at that time. But now that guidance has changed, the bank is going to remain open. I think that the likelihood that it's going to remain open and remain successful is actually now decently high. So if you're a small business, actually, ironically, the safest place to put your money is in Silicon Valley Bank right now, because they're the only bank in the United States that has guaranteed full insurance on your deposit. And Janelle, just between you and me, I'm super relieved and excited that Silicon Valley Bank is going to continue to do business, because they have been a huge presence in Silicon Valley, serving small businesses, not just tech companies, but agricultural projects, nonprofits. Their lending products are amazing. There are not that many banks who are as small business friendly as Silicon Valley Bank. I am breathing a huge sigh of relief, because I am so grateful that they're going to continue to do business for our community.
So, Eric, what is the lesson for founders? What can they take away from this crisis?
So, Janelle, I think there are a lot of lessons out of this crisis. The first is around communication. If you find yourself in a crisis situation where you're serving other clients, over communicate, provide explanations to a level where a 5-year-old can understand and can matter a lot. And I think that was one of the biggest failures of Silicon Valley Bank in the past week, is that they did not communicate really well with their clients to home markets. That's part one. But this is what you should do next. So despite the fact of what we were saying that your deposits are safe, it doesn't hurt to also have some backup plans, because it doesn't hurt to actually have your money in a few places where you're under the FDIC limit of $250,000, just in case there are other kinds of runs like this in the future, which I think are highly unlikely. But, it doesn't hurt to hedge your bets to have just a few more bank accounts too.
Thanks everyone for tuning in to today's emergency episode of Uncapped Notes. Remember, if you want more founders to be able to find helpful content like this, please like and subscribe to Uncapped Notes.